Hi guys, Brown Asset Management here, and today I'm doing a stock review of Facebook, ticker symbol FB, using my 6 simple steps. Stick around to the end of the video to see whether Facebook is still a buy in 2021, but first please like and comment if you enjoy the video and subscribe if you enjoy investing and stock analysis videos. Now to quickly summarize Facebook, Facebook is focused on building products that enable people to connect and share through mobile devices and personal computers. The company's products include Facebook, Instagram, Messenger, WhatsApp and Oculus. Facebook enables people to connect, share, discover and communicate with each other on their mobile devices and personal computers. Instagram enables people to take videos or photos, customize them with filter effects and share them with their friends and followers in a photo feed. Messenger allows communicating with people and businesses alike across a range of platforms and devices. WhatsApp Messenger is a messaging application that is used by people around the world and is available on a range of mobile platforms. And Oculus is a virtual reality technology and content platform that offers products that allows people to enter an interactive environment to play games, consume content and connect with others. The share price of Facebook at the start of the year was around about $206 a share. Then in the pandemic it hit lows of 137, surged up since then to highs of 304, leveled off since then, going up and down, but now at around $283. The market cap of Facebook is $791.9 billion. So now let's look at our 6 simple steps. The first is P/E ratio less than 20. So the P/E ratio is the price divided by the earnings, and that gives you the P/E ratio. And we want this to be less than 20, as that is the historical average of the market, and Facebook is 33, so that is a fail. Now let's move on to the financials. The earnings of Facebook are going to be released on the 27th, so that will be for the entire year of 2020. So right now the most recent data I have on the annual level is from 2019. Let's look at step number 2, is the revenue increasing over the last 5 years. So the revenue is income generated from normal business operations. The revenue has gone from 17.93 billion to 70.7 billion, so that is a massive check mark there. Step 3 is the profit increasing over the last 5 years, and Facebook's profit has gone from 3.69 billion to 18.48 billion. So once again, another massive check mark. Step 4 are the shares outstanding decreasing or flat. And Facebook's shares have gone from 2.85 billion and stayed at that level and are still at 2.85 billion. So that is a pass there. Normally the shares have been going down or up, but Facebook's has stayed flat, which is still good. Please leave a like if you enjoyed the video, give your comments on the next stock you would like me to review, and subscribe if you've enjoyed the video and enjoy investing and personal finance videos with stock reviews. Step 5 is, are the current assets greater than the current liabilities? So the current assets represent all the assets of a company that are expected to be sold, consumed or used throughout that one business year, whereas the current liabilities are the company's short-term financial obligations within that 1 year. So Facebook's current assets are 66.22 billion and their current liabilities are 15.05 billion. So there's a massive checkmark there. They can easily pay off all of their current liabilities. Also, if we look at their total liabilities, that is 32.32 billion. So they can once again pay off all of their liabilities with their current assets. Great news for Facebook. I'm going to give that a double check. The last step is the free cash flow increasing over the last 5 years. So to get that, we take the cash from operating activities minus capital expenditures. So let's see if it's increased. 5 years ago, Facebook's free cash flow was 7.8 billion and it has gone up to 21.21 billion. So that's a massive check mark again. The free cash flow has dramatically increased. So the average free cash flow of these last 5 years is 14.69 billion, making the price to average free cash flow around 54 and the price to the most recent cash flow at 37. So they are both very, very high. You want that a little bit lower, maybe 25 or even times 30 against one of these big growing companies like Facebook. So 37 and 53 are very high. Facebook does not pay a dividend, so we will not be going through that information here. Now moving to the analyst ratings. Refinitiv ratings have it as a consensus of buy, with 45 buying, 4 holding, 2 selling, with a target price of $325.50. And TipRanks has a target price of $328.13, with 75% bullish on Facebook and 25% bearish. And if we look at Simply Wall Street, they have a fair valuation of Facebook at $294.28, which means Facebook is 5.5% undervalued to its fair value. So to just quickly recap the 6 simple steps, the P ratio was 33, which is over 20, so that is a fail. The revenue over the last 5 years has increased from 17.93 billion to 70.7 billion, check mark there. The profit has increased from 3.69 billion to 18.48 billion, once again a massive check mark. The shares have stayed flat at 2.85 billion. The current assets can pay off the current liabilities with 66.22 billion to 15.05 billion, check mark there, and a extra check mark for the current assets being able to pay off the total liabilities, as the total liabilities are only 32.32 billion. And finally, the free cash flow has increased from 7.8 billion to 21.21 billion, check mark again there. So do I think that Facebook is still a buy in 2021, even before earnings are released? And I'd say the answer is definitely yes. I think they're a strong company that's going to keep on growing. Their revenues are growing, their profits are growing. Their revenues growing massively, their profits growing massively, their free cash flow is increasing. If I go to my model, I have Facebook valued at $301.85 a share, which means you can currently get them at a 6.7% discount. To me, this is a great buy. I will be picking up some Facebook based on these results, and I'm excited for their earnings tomorrow or today when this is released. I think they'll beat expectations. Let's see how they compare to my value, but I do think Facebook is a buy. I think it's a great company with a great brand, and they're going to continue growing and making the right moves. So I want to thank you all for watching. Hope you've enjoyed the video. Please leave a like and give your comment on thoughts. Subscribe if you enjoy investment personal finance videos and stock reviews, and I'll see you guys next time.